सब दोस्त लोगों का नमस्कार है। एसएसएम जी का स्वागत है आपको। वेलकम टू एसएसएम जी। आज से एक नया प्लान कल लॉन्च हो रहा है। वो नया प्लान का बारे में बताने के लिए हमारा राजगोपालन सर से इधर आ गई। उन्होंने नया प्लान के बारे में क्या बता रहा है अभी सुनाएगा। एंड वेलकम टू एसएसएम जी सर। कैसा सर अभी स्टार्ट कर देगा क्योंकि हमारा पास टाइम नहीं है, सो इसलिए वी कैन स्टार्ट।
Sir, screen is visible now. You are able to see the screen.
Yes, sir.
Good evening, my dear SSMG Hindi members and also Mr. Sarwan sir. So, as you are all aware, tomorrow our LIC is going to announce the new pension plus plan, which is 867, which is the unit-linked plan. So before that, let us understand what is ULIP, what are all the benefits. Then we will come to the session. Maybe I like to quickly go through because there are so many slides. For want of time, maybe you can go through that. I will share the slides later. But please understand, in the question and answer session, you can raise the questions if any. See, I am putting some questions before you. When the interest rates are down, small savings or LIC and mutual funds, what will be the effect? When the interest rate falls, people will turn into mutual funds or stocks. So do we have products to offer? Someone who wants no short term, they want some about 20 to 25 lakhs in short span of 10 or 15 years, 12 years, 7 years, like that. We don't have. We have conventional plan, that's different, but that doesn't offer much return. Maybe max 6.5% or 7. We have guaranteed plans, but that has got a low risk and a lower return, right? So as per IRDA, if you see, all insurance companies, including LIC, totally 27,280 crores premium collected, whereas this is statistics as of July 21, whereas LIC could collect only 93 crores. Now you could see where we are. That is the reason why LIC is popularizing, motivating all the agents to sell more ULIP policies. But unfortunately, it's not going through. But at the same time, it's all we need to understand the features and everything. Then we should target the market. Different segments. Some youngsters, if you see, they will look for term plan. Then they will go for balance money, investable surplus they will be having. They will be investing in mutual fund stocks. So we should target those guys and grab them and put into our ULIP plan. That's why this is a slide says. Again, ULIP, if you see, it has got a triple benefit like ATC, tax benefit, risk coverage, and tax-free maturity process. Lock-in period, as you know, 5 years. In mutual funds, there is no lock-in period, excepting ELSS, which is equity-linked savings scheme. Other schemes, they don't have any lock-in period. It has got exit load. It is attracted to short-term and long-term capital gains. If you see people who have put in mutual fund, in 2 years they will exit, or after 5 years they will exit. So most of the people who have invested in mutual fund, they won't stay for a long time. Whereas it is for us to grab them into ULIP and to stay them because it's a pension plan. If they stay more, longer the tenure, higher the return. That is how we should popularize this scheme. That is a unique selling proposition of this product. Here, if you see, prior to 2000, there were so many charges charged by all insurance companies, including LIC, because at that time it was permitted. Now it is not so. After 2010, IRDA has stipulated stringent regulations which regulates each insurer has to charge some kind of minimum maximum charges. That is why all insurance companies are operating. But LIC is the least who is charging on the ULIP plans. So refund of mortality we are giving in SIP plan, and guaranteed addition we are giving in both SIP and Nivesh Plus. Like that, there are so many. Then here again, accident, accident benefit rider also in ULIP we can give. Okay, this is the general ULIP. I am not getting into the new plan so far. I will come to that plan later. So what else we need? Like that, no, balanced fund, growth fund, bond fund. There are 4 funds like that. No, if you see mutual fund, there may be having dynamic fund, and they will be having no overnight fund. There are so many funds. Let us not talk about that. This is purely transparent fund. Bond fund means government securities, treasury bills, commercial papers like that. Balanced fund means both government securities, mix up investment. Secured fund. So there is certain percentage which stipulates that LIC has to invest like that. Assuming 100 rupees means the 30% needs to be 30 rupees needs to be invested in some fund, and the balance 30% needs to be invested in some other fund. Balance 40%, 40 rupees invested in equity fund. Like that, it will split into the. It is available in the proposal form also. You would have seen that. Same thing here also. So going forward, ULIP is a game changer. 50% of our products will be only ULIPs. So we all should have be equipped ourselves to sell more ULIP plans. So when the customers, you should ask the customer like that, how much return you want, what for you, what is the goal, financial goals, when do you need money, do you want tax benefit or not? These are the questions. If you ask, he will say yes. So then we have a product. This is a product like that we should sell. So please see the ULIP and mutual funds returns. Similarly, both are same. This is not LIC ULIP, general ULIP where they have invested. So like that, no, this is not LIC ULIP. These are the categories, no, various stocks, mid cap, multi-flexi, dynamic asset allocation, government bonds, like that. So similarly, if you see the last column, you can see the returns. Here also again, category average. Both are same. These are the 100 nifty companies where LIC is investing. They are all profit-making companies. So these are the 100 companies. Some people ask, where do you invest my money, sir? I can invest in ULIP. I would like to know, where do you invest my money? If the person is putting about 20 lakhs as single premium, something like that, he will ask so many questions. So we should be able to answer to them. That is why I'm showing this slide. So mutual funds, if you see, why I'm showing this is, huge amount is going towards mutual fund investment. As of July 22, 37,76,911 crores money has gone into mutual fund. That is the reason why LIC is saying we should tap that market. Those who are affinity towards mutual fund, we should ask them to diversify their funds to some extent, if not fully, to our ULIP. Like that, youngsters, as I said, those who are born after 1980, so the age group below 40 is the targeted audience. So we have to target them, and they may be taking the term plan. So balance amount they may be putting into mutual fund. You have to grab them into this, because we are giving tax wise, and pension is the game changer, and the health plan is the game changer going forward. So for that only LIC is, you take the risk, you earn more. If you see pension plan, we will give average return. If you see a conventional plan, Jeevan Labh, Jeevan Umang, everything maximum not more than 7%. Maximum. Even guaranteed return plans. But here it is not so. You choose the fund, you take the return, we will charge minimum rate. You avail the tax benefits, everything. You enjoy the benefits, right? That LIC is saying. So longer they stay with the plan, higher the return they will earn. That is how that mutual fund market is like that. You have to bring money from the mutual fund asset under management funds to LIC under ULIP. That is why I'm showing this slide. So if you see that there are so many plans we have launched earlier, see the current NAV as on 2nd September. This chart was shared by LIC authenticated. Okay, extracted from the LIC website. Now you can see 2005, 2006, 2010 average return NAV. If you can see, maximum future plus NAV 61 rupees. Maybe 2005, you can say it's about 17 years. That is different. If you calculate the units multiplied by this NAV, how much they will get. Like that, we have got to show this kind of testimony of records to the prospects and sell the ULIPs. So let us understand some kind of bonds, funds, what is the concept of the funds. So unit-linked plans, why we are selling is it offers flexible returns coupled with the life cover. So balance fund, those who are very appetite to have debt fund or conservative return, those who are ready to take the risk of moderate risk level, those who are ready to take higher risk level, they will go for growth fund. So like that, we have got 4 funds. That is why I'm showing this to you. So it offers blend of insurance coverage, tax benefits, as well as investments return. So it's a goal-based financial solution. If somebody wants, I have a daughter, she will be ready for marriage at her age of 25. Okay, in another 10 years, I want that return something. So we should not sell normal endowment plan. We don't have plan, no. So we should sell only ULIP. Of course, because it's an investment based, they can take the risk. So they will be enjoying the returns. So ULIP or term assurance. If somebody is taking term assurance, they won't get the money back. In the ULIP, they will get the money back. But I am not against term plan. You can give both. Like that, you have to sell. So advantages of ULIP, if you ask me, market-based returns. Traditional non-linked plan, no, it offers reasonable return, guaranteed addition, that's all. But it doesn't offer much. ULIP is the best solution if you ask me, wealth creation and protection. Tax rebates, of course, available. Death benefits always for all policies, it is tax-free, no doubt about that. And the long-term tax benefits, 5 years lock-in period. If an ULIP is surrendered after the lock-in period, entire surrender value is tax-free. Okay, that's important. So need-based, retirement, child education, marriage, etc. Longer you stay with the plan, that's what I said in the earlier slide. So multiple investments, various funds like debt, equity, and mix of both. So all charges are being governed by IRDA. So LIC cannot charge more. So, but LIC is charging very, very reasonable. So you have to go through the other products of various insurers, how they are charging. You have to compare like that. So we are the least and we are the best. Like that I can say. So this is how the various investments returns are showing, like PPF, NSC. So now PF also now it is taxable. If a person who contributes 2.5 lakhs per annum from his salary towards provident fund, the salary they are deducting PF, no. In excess of that 2.5 lakhs, for the interest what he earns, that is taxable. You see the higher category, the person who will be paying PF, no, their contribution itself in monthly maybe 3 lakhs, 4 lakhs, 12% of the basic plus DA. So 3 lakhs into just multiply into 12 months, 36 lakhs. But in excess of 2.5 lakhs, balance amount, whatever the PF authorities or trust investing, that amount is taxable. That's very, very important. That is a selling point. If you see all the instruments, ULIP offers 10 to 12%. So lock-in period 5 years. Which rest of the scheme, if you see 15 years, 5 years, but it's only average return. So what is a bond fund? Bond is, typically is a very conservative return, one who lends to the government or corporate. So there you would have heard so many bonds, no? So they will be issuing the bond. Okay. They will be collecting the interest. That's the safest. They will be investing. That's called bond. There are so many bonds funds like that, debentures, fixed deposits, everything is conservative return. This is the bond fund. We have got separate bond fund. So in that, short-term investments suitable for investors, then medium to long-term investments, government securities or gilts. These are all the bond fund. So in this one who chooses, why I am showing this, there are 4 funds we have. You should know where they are investing. Why should I show this to you? I just want you may be aware. Some people may not be aware. That's why I'm showing. So there is a bond fund which gives assured return, conservative return, lower return, but safest return. Here in government securities, you don't tell government securities, it always assured return, but very, very lower return. Treasury bills, no discounted rate. 100 rupees means 98.220 rupees they will give. Balance 1.8 will be the return. So like that, treasury bills. Again, government securities, they will give 10-year bond. Like that, in the interest they have put 7.17%. So why I am saying policyholder need not have to worry about that. Policyholder should know where LIC is investing if they choose the bond fund. That is what I am showing this slide to you. Globally, you should know. That's all. Though you don't have to go into detail, but at least we should be able to tell what is a bond fund if somebody asking where you are investing. So like that, these are all the instruments that we are investing in. So again, I am in the government securities, special securities. There are so many state government, they will be issuing bonds, central government security, treasury bills. Again, these are the money market instruments like that commercial paper. If the corporate sectors they want to invest, they want to come out with a very big project, or they want to incur some commercial what should I get, capital expenditure. They are coming with a new plan, something like that. They will be going for commercial papers, which only banks can issue. This is being regulated by Reserve Bank of India. So these are all the money market instruments which corporates can get from the banks. Like that, treasury bills also, I told you, commercial paper, same corporate. So these are all things you should, at least globally, you should know. Repurchase agreement. There are so many money market instruments where corporates and other entities can raise your money from the banks. That's important. So equity investment, as you people should be aware. So LIC is investing in 100 companies, which I showed, nifty companies. So solid companies, all profit-making companies. So the person who is choosing the growth fund, so LIC will take care of investing in those companies. LIC is the leader in investing the equity stocks. That return itself, it goes huge amount. So even for conventional plan also, LIC is investing in various forms. So they cannot keep the money idle. They have to return to the policyholder because they have to earn profit. They have to distribute the bonus for the profit company, profit plans. So guaranteed plans is also there. So ULIP is a separate fund managed. So they will not mix up with ULIP and conventional plan. So this is what the difference between ULIPs and ULIPs is 5 years lock-in period. Mutual fund doesn't have any lock-in period excepting equity linked saving scheme, which has got 3 years lock-in period. Again, a regulatory requirement as per IRDA only we are charging the charges, which are very, very minimal. This is basic difference between. So mutual fund versus ULIP, just to be offer tax-free 5 years lock-in period, ATC, Section 10D. These are all the things not available in mutual funds. These are all the things we should tell the customer to get the ULIP plans. Now, bear market, bull market. You know that when the market is down, people will buy so many stocks. When the market is up, they will sell. But here again, we ourselves are selling the policyholders. You stay with the plan, sir, 5 years, then you come out. Like that, we are selling. But that's not the right way, if you ask me. We should not tell like that. They may ask for lock-in period. Yes, lock-in period is there. But in this plan, which I am going to talk is, pension plan is targeted to only pension. So we have to tell them that at least you should stay with the plan for the selected term. So NAV, how it is arrived, I am just a small example. 5 years return, how much they are getting? 6.96% every year. So like that, 25 rupees NAV has gone to 35 years after 5 years. This is the formula. Now let us come to the subject. LIC will be launching the scheme tomorrow. SSMG is the first platform where we are discussing. So many people would have YouTube, everything, whatever they know, they would have put WhatsApp, everything. but SSNG is the only platform where we discussed in Tamil group. Now we are discussing in Hindi group. So what is the USPs for this plan? Longevity increases. That is the main point you should tell. 1950, if you see, people know below 40, they will not be alive, no? So senior citizens are going home. Children are, they are not taking care. Huge surplus is available. When a person is 35 age, you should tell him. So you don't know what will happen after 20 years. So this is the right time. You don't know whether your children will not take care of you. Like that, you have to market this product. Up to 42 years, this policy can be given. Very, very long term, which means when a person who is taking this policy at the age of 25, he can pay premium up to 42 years, which means at the age of 67 years, that is a vesting period. Vesting period is nothing but the policy maturity period. Accumulation period, deferment period is nothing but premium paying term. That's very, very important. Market-based return, guaranteed addition. In this plan, one of the best features, that is what I put. So one of the best features available in this 6th year, 10th year, and 11th, from 11th year onwards, every year guaranteed addition they are giving with some varied percentages on the annualized premium. I will show you the chart. So commutation of corpus, assuming maturity at the time. In this plan, there is no maturity. Please understand. Death benefit is there. In this plan, there is no maturity. Only 60% of the fund value that can be withdrawn as a commutation, which is tax-free. Balance at 40%, assuming the money accrued is fund value is 10 lakhs, 6 lakhs can be withdrawn, which is tax-free. 4 lakhs can be compulsorily converted into annuity. In that also, out of 4 lakhs, 2 lakhs can be invested anywhere by buying a fresh annuity plan from the other insurer. Balance 2 lakhs needs to be bought from the LIC at the prevailing rate when they have in LIC have different schemes of annuity plans. So transparency, goal-based, huge potential available, systematic and disciplined saving. So we have to tell these type of unique selling points and sell this plan. So coming to that, it's a non-participating unit-linked pension plan. Non-participating means it doesn't participate in the profits, but because if you can see the unit-linked insurance plan in the receipt itself, they would have mentioned risk under this plan, investment risk under this plan is borne by the policy holder. They would have mentioned on the top. If you see the first premium receipt, they would have put, even for all receipts, they will pay, they will put like that. So regular single premium is available. All modes are available. 4 types of funds can be chosen. Enhanced guaranteed return, 6th year, 10th year, from 11th year onwards, every year with some varied percentages of the annualized premium. So who are all eligible, how much we can pay, what conditions, minimum, maximum, sum assured. There is no sum assured concept here. Underwriting rules are expected. I don't know. I cannot talk. I am not supposed to talk on that. We have to wait. But there is no sum assured as I see. There is no, again, coming back to your query, there is no rider. There is no mortality charges. Death can be happen, either by of natural or accidental death. That is what they have mentioned like that. There is no rider. If it is a rider, there will be a separate premium for that. No rider in this plan, even no risk. If you ask me, there is no sum assured. Okay, so minimum vesting is 35. If a person who wants to have receive pension from 35 years onwards, if he can take 10 years plan at the age of 25, 10 years from 35 years onwards, he can receive pension. Only pension will be given. Commutation maybe 60% can be withdrawn. Balance 40% can be paid as annuity. So minimum premium yearly 30,000, off yearly 16,000, quarterly 9,000, 3,000 monthly match. Multiples of premium 1,000, 3,000, 250 rupees only for monthly option. Single premium 10,000 rupees is the monthly the multiple option. Maximum term 42 years. So annualized premium, as I told you, annualized premium is if the quarterly premium is 4,000, 64 into 4. Quarterly premium 5,000, 20,000 is the annualized accumulation period. Accumulation period is premium paying term. That's all. PPT, what we are saying, no? So assuming the person is taking at the age of 25, he is taking for 15 years. That 15 years will be the accumulation or deferment period. Vesting period is the maturity period. 25 plus 15, assuming that is the 40. That is the maturity period. Annuitization means when the policy matures at the age of vesting, so that amount, some kind of money will be available, that will be annuitized. Only annuity will be given. Commutation 60% can be given. Lock-in period 5 years, as you know. Partial withdrawal can be done after 5 years, not before that. Only 3 times in the policy term. Only 3 times in the policy term after 5 years lock-in period. Allocation charges, first year, second year, third year, there is a separate allocation charges. Balance amount will be invested. Allocation rate means balance amount, whatever available, that will be invested. If the policy premium is not paid within the grace period, that policy gets lapsed. So that money directly goes into the discontinuance fund. Discontinuance fund is a separate fund which will be managed by LIC for those who are not paying the premium and those who makes the policy lapsed. That's very important. Switching of funds once in a year, policy year. Wherever I say year, it is a policy year. Okay. If somebody takes policy tomorrow, then next 12 months, that is the end of that 12 months will be the policy year. So first four times one can switch over the funds from one fund to other free of cost. Next time, fifth time, it will be 100 rupees per switching over. This is the how they are LIC is arriving net asset value. If you see, there is a 2 crores amount available plus value of current assets. So some total amount 2 crores is there. Today, somebody is bringing, LIC is bringing this much amount minus liability. Liabilities means there will be expenses, something like that. So that's called the liability provisions. Divided by today's units, number of units. That is the NAV, 10.6875. This NAV will be the basis, one who chooses to buy tomorrow or day after. Whenever daily basis, up to 3 o'clock is the cutoff time, based on which that NAV will be arrived. This is the formula to arrive at. So coming to the main subject, 4 funds available: pension bond fund, pension secured fund. They just added pension word, that's all. Rest of the things same, similar to SIP and Nivesh Plus. If you ask me, 60 to 100% minimum, then 0 to 40%, equity shares no, here low risk, pension secured fund. So these are the minimum percentage, maximum percentage. LIC has to invest the policy holders' money whenever whoever chooses the particular fund. These are switching over. What I said is, he can choose from this fund to this. He can choose like that. Switching over can happen depending on the NAV if he wants to switch over. So this is the minimum. If you see equity growth fund, 40 to 100%. So these are the proportionate percentage where LIC can invest policyholders' money. That is the stipulation by IRDA. Again, this is a discontinuation fund, separate fund. If somebody is discontinuing the policy, that exact total amount accrued as on date of the discontinuation, everything will go to the discontinuation fund. Again, now benefits, what are the benefits? Benefits, there are only 2 types of benefits can be there. One is on vesting, that which is nothing but maturity. One is on death benefit. If the vesting means nothing but maturity, fund value, that will 60% can be withdrawn. Balance can be purchased by way of annuity product, either from LIC or from other insurer. But 50% of the net of commutation has to be bought from LIC only. Balance 50% only can be bought from other private insurers. This is applicable for reduced policies also, paid up policies also. This is the proportionate. Vesting can be extended, assuming somebody has taken the policy for 15 years, 20, so 40 years. In between, if he wants to extend the policy term to say, sir, I have 10 more years of service, I want to extend, I don't want money now, they can extend either by paying extra premium also or without paying premium also, they can be with the plan. so that his fund value NAV goes up. That option is available. So far, it was not available. That option they are giving. So again, death. If it is death, means there are only 105% of the premium will be paid, or higher of the fund value, whichever is higher. So assuming one would have accrued 20 lakhs, something like that, and he would have paid premium some amount, so 105%. So LIC is assuring you will not be at a loss. We are paying 105% of the total premium paid, or fund value, whichever is higher. This is the death benefit. In this death benefits also, nominee can receive settlement option. That option I have given. 5 years they can receive the death benefit as settlement option. They can also purchase annuity product from LIC. Like that they are given here. So this is the very, very important table you should know. Guaranteed addition, how it occurs, how it is getting accumulated. Assuming 40,000 is a regular annual premium, in the 6th year 5% they are giving on the premium. Okay. And 10th year again 10%. So 2,000, 4,000. Starting from 11, 12, 13 like that, they are adding. This amount is in addition to the NAV fund value. So this is a separate guaranteed addition. For those who stay with the plan till maturity, they will be enjoying. So 42 years they are given time. So assuming somebody is taking at the age of 25, maximum 42 years, 67 years, LIC is giving guaranteed addition like this. This is the regular premium. This is the single premium. So if you can see 0.25, 0.25, it is getting added every 5 years. So total amount I have put, totally 8.56 is the return. This is, please again I am repeating, in addition to the fund value. Who will give like this? This is the most very, very attractive selling point to sell this plan, which none other plan has this type of guaranteed addition in LIC's products. So very, very attractive features USP under this plan, even for single premium also they are giving. Assuming 13,60,000 guaranteed addition itself, what is how much it comes? 1,16,400. So return is comes to 8.56%. So partial withdrawal. So separate, when they receive the partial withdrawal, that guaranteed addition proportionately they will give. Similarly for extension vesting, if they want to increase now, that guaranteed addition will differ. So extending the vesting means minimum they should be positive or should be below 60 years. That's very, very important. Accumulation period maximum 42 years. They should give the return request based on which they can extend. They can add the premium also. That is not the top up premium. They can add the premium. Okay. This is the premium allocation charges. Assuming somebody is paying 10,000 rupees. Somebody is paying 10,000 rupees as a quarterly premium. Okay. So 7%. If the annualized premium exceeds 50,000, 7%. 2nd to 5th year, 4.5%, 4%. Why I have put here is below 50,000, above 50,000. Annual premium. If the quarterly premium is 20,000, the annual premium is 80,000. So you should see this table. If the quarterly premium is 10,000, annual premium is 40,000. You should see this table. 2 to 5 years, 4.5 years, 4 years. 6th year onwards, 3.5%, 3%. Like this mortality, there is no mortality charges because here there is no risk involved. There is no mortality charges. Policy administration charge only first 5 year. This is the policy administration charges. There is a formula. Minimum charges per month they will deduct. If you see, one by one every year it will reduce actually. Equivalent units will be taken against the value. So your units will be deducted like that for single premium also. This is how that I have put like the formula. Based on the formula, I have put for the same 30,000 yearly premium, 16,000 half-yearly premium, quarterly premium 9,000, 3,000. This is my own calculation. Put it in Excel and I am showing it to you. This is the minimum 57, 55. Same thing. If you see the formula here, this way I have just calculated like this. This is how policy administration charges comes illustration. Fund management charges only 1.25%. Switching charges, there is no switching charges. Only after 4 switches, 5th switch is only 100 rupees. Bid offer spread, no, that we don't have to worry about that. This is a discontinuation. When somebody is discontinuing the policy by not paying premium, first, second, third, fourth year. So this is the charges they will deduct. If the annualized premium is below 50,000, annualized premium above 50,000, certain percentage, maximum 3,000, 2,000, like that. So when the year goes down, no, it will be a nil charges after 5 years. Like this, for single premium also they put like this. Any other charges, partial withdrawal, 100 rupees, only 3 times it is allowed. Miscellaneous charges means policy alteration, mode can be altered per incident, or mode can be altered. Okay. Tax charges. Tax charges here in the policy premium, there is no GST. Charges like fund management charges, policy administration charges, like that. Here, partial withdrawal, these are all the charges which will attract GST. There is no GST for the premium. Please understand. So LIC has got the right to revise the charges with the approval of IRDA, but IRDA has stipulated maximum you can charge this much only. So premium allocation charges, policy administration charges, for everything if you see, LIC is the least who is charging very lesser charges. If you see 12.5% they put, but we are charging policy allocation is 7%. Policy administration 150, 500 rupees per month. We are charging only 100 rupees. Fund management 1.35. That is the maximum. Partial withdrawal 500 rupees. We are charging only 100 rupees. Switching charges 100 rupees. Miscellaneous charges 100 rupees. But IRDA has given permission up to charge up to this. But where we are not doing this, we have to tell like that to the customer. Revival is possible within 3 years from the first unpaid premium. Surrender is available. Even before lock-in period also they can surrender. With money goes to discontinuation fund. So switching over fund 4 times in a year. I just told you this settlement option available. Partial withdrawal funds after lock-in period they can avail. These are the wrong. Partial withdrawal they can do that. Maximum 3 times. As I told you, no plan change between this plan to next plan. Some other plan you can't change. No policy loan, but assignment and nomination available. Suicide clause 12 months. Fund value will be given. Free look period 30 days. No backdating, no reinsurance. Separate proposal form for this. Death claim normal process only. Okay. For feature in section 45, that you would aware that for feature in certain events. That is suppression of material information we are saying. No, that's called as again policy alteration as applicable, as I told you. Commission first year 5% with the bonus commission, single premium 2%, second year honors 2%, no bonus commission. These are all the type of no applicability of NAV, like death claim, guaranteed addition, revival, settlement option. Whenever they are giving, when the LIC receives the request, return request, based on that particular day, NAV will be calculated, cutoff time will be 3 p.m. Else it will be taken as next day. Like that only, that is why I am showing. You may ask, no, how did they arrive when they give the no at around 4 o'clock when I give switching over letter? How will they take the NAV? It will be based on next day. If you give before 3 o'clock, that's a cutoff time. That's why I put here. So these are the tax factors for mutual fund. Short term, long term. You should know. Whereas in ULIP, there is no point like that. That is why I'm showing like this. 1 year, 3 years. Equity funds, non-equity funds. Whereas in ULIP lock-in period only 5 years, there is no tax. Just to show you the how mutual funds are showing taxes. This is, as I told you earlier also, now ULIPs also taxable when the yearly premium is above 2,50,000. Please understand, if somebody is having 4 policies with an yearly premium of 1 lakh, 1 lakh, 1 lakh, totally it is 4 lakhs. So aggregate amount should not exceed 2.5 lakhs. So only up to 2,50,000 only, it is not taxable. Otherwise, capital gains tax will be attracted. Similarly, whatever the lower this thing, These are all, if you see the calculation, wherever the premium exceeds 2.5 lakhs, it is taxable. Section 1010D benefit is not available if the premium exceeds 10% of the capital sum assured. If the premium is below 2.5 lakhs per annum, then all benefits available, no tax. That is why I am showing like this. This has happened from 1st February 2021, separate section. So when you sell ULIP, somebody will ask, you should be able to tell when the premium exceeds 2.5 lakhs, it is taxable under the capital gains tax. So this is what I think, to the extent possible, I think I have covered. I'm not sure how many people have understood, but still questions are welcome. But I know it's a dry subject, but no other option. But everybody, ULIP is, people have a different mindset, which I cannot comment, but we have to sell. That's what I would recommend. Thank you, Sarvan sir.
सवाल पूछना तो पूछ सकते हैं हमारा केएसआर सर से.
I am very happy.
कोई भी सवाल है तो भी पूछ सकते हैं. कमलेश सर, any doubts or clarifications?
Your explanation excellent.
Thank you.
In detail.
Any question? Uroshi ma'am, what happened? You are looking tired.
उर्वशी मैम को कुछ नेटवर्क प्रॉब्लम है, आवाज नहीं आया. ओके, कुछ सवाल नहीं तो बंद कर सकते हैं, क्लोज कर सकते हैं. इट्स ऑलरेडी 22:18. ओके, थैंक यू सर, थैंक यू केएसआर सर फॉर गिविंग दिस. बहुत अच्छे से आप बताया. एंड 867 प्लान्स का बारे में हमारा हिंदी फ्रेंड्स का सबसे हम आपको. ओके, उर्वशी मैडम आ गई. उर्वशी मैम आप पूरे क्लियर है, कनेक्टेड है?
She exited, she is not there.
Not connected. Okay.
She's coming, I think.
Yeah.
Hello.
Yeah, ma'am.
Yeah, ma'am.
Sir, after testing the patient's
Madam, video, you close the video and come. Because
bandwidth problem.
Bandwidth problem. Audio.
After wasting period, sir, the pension will start, no?
Yes, yes.
So no need to buy another pension plan, no? You were saying, no? After wasting period, 60%.
That is what, madam. At the end of vesting period, LIC will ask you whether you want to buy a pension plan with us. At that time, prevailing rates, whatever the Jivan Akshay 7, Jivan Akshay 8, or Jivan Shanti, something like that. No. At that time, whatever the prevailing rate, annuity rate, that will be offered to you. And in that accrued amount also, you can withdraw 60% as a commutation, which is tax-free. Balance 40% can be paid as annuity for lifelong under various options. At that time, whatever LIC decides, we don't know. But only annuity will be payable. No, there is no maturity payment under this plan.
Okay. So in the same plan, 40% we can get pension. After withdrawing
No, the 60% is also optional. Not necessary that you should commute. Commutation is only for your convenience. You are drawing the money, which is tax-free. Even in national pension scheme also, they have offered nowadays like that. After 58 years, you can withdraw the amount, whatever accrued. 60% you can commute, which is tax-free. Balance can be received as annuity. Same thing they have put in our plan also, because that is being regulated by Pension Fund Regulatory Authority. IRDA is one thing, but in this case, Pension Fund Regulatory Authority is also interfering to manage the pension plans. Like that, LIC has structured this plan, if you ask me.
That means if we want same in this plan itself, we can keeps on getting pension till we are alive, right?
Absolutely. You are right. Absolutely.
And if anything goes wrong, then whatever will be the fund value that time, or 105% of the premium paid will be refunded to nominee.
Correct. What they say, this is the pension plan though they are selling. At that time, you can buy a fresh pension plan from LIC or some other insurance company, for which you will be offered, because we don't know at that time what will be the interest rate. Correct. So LIC cannot commit to the pause for a person who is taking the policy for 42 years. Correct.
Okay. Yes.
Yes. That's what. Okay, Sarwan sir.
Yeah, okay, sir.
Anybody is having any doubts, sir? Can we close?
And accident rider is not there. No rider, nothing. No rider is available.
As far as I know, there is no rider.
No insurance and no rider also.
Okay.
Sure. Okay, thank you, friends. And सब लोग का again welcome and good night.
Thank you, sir. Good night.
Every Saturday and Sunday we are conducting, क्योंकि नया लोग सब लोग 4.0 लोग आ गए, इसलिए मैं बता रहा हूँ. Every Saturday और Sunday हम लोग हिंदी क्लास करता हूँ, सब इंश्योरेंस का बारे में बता रहा हूँ. So you are always welcome and thank you so much. KSR sir, thank you so much.
Thank you, sir. Thank you.
We'll close the session.
Thank you, sir. Thank you for giving your valuable time.
Thank you, sir.